Hey, John with Simple Property Management. Today, I want to talk about our June market update. So let's jump in here. A lot of good things to talk about. So basically, the market is still strong. We're in the summer months. I don't see that cooling off anytime soon until we start getting into the fall. It will be interesting as interest rates are going up. I think the market's going to get even stronger. Residents are looking for amenities. So basically, we're seeing more and more residents that are looking for washer and dryer hookups, AC. Air conditioning is mostly going to be because of the summer, but more and more residents are looking for air conditioner, central air conditioner units for their properties, just so that they don't have to pay to run window shakers all summer. I'm going to expect a small slowdown in the amount of showings that 7 to 10 days around the 4th of July. A lot of people are going to be traveling. So I would expect a little bit of a slowdown around July 4th. And then we'll talk about foreclosures still low. We'll talk about some pets, the maintenance costs, interest rates, and SIRA funds. So let's jump in it. So you'll see this is from April 2022, our video in Kent County. And you'll see there was a little dip here for the 1-bed and the 2-bedroom units. I expect this mostly because April is pulling data from the late winter months, but you'll see the 3 and the 4 beds, not really much of a dip. In fact, it was going up in some cases. But let's check out Kent County now from the data we pulled for May. You'll see that there's a little blip and then it went back up in the 1-bed and the 2-bed. 3-bed and 4-bed still strong, so that's really good. 1-bed single family in Grand Rapids is $895. Back in April, that was $883. And basically throughout all of these, until you get to 3-bedroom, the 3-bedroom single family back in April was $1,381, and now it's $1,401. 3-bed multifamily is only up by about $1, and 4-bed single family is up by $3 and $4 a month for the 4-bed multifamily. So 1 and 2 beds, and in some cases the 3 beds went up a fair amount from May or from April. So it's good to see the market's still strong. Kind of for Grand Rapids, May, you can see, as we talked about, the market's going up. A little bit of a blip in the 3-month change, mostly because I think we're still pulling the data from some of those winter months. But overall, the market looks really good. I really like seeing, $67 to $90 12-month change. That's good for our market. And some Wyoming stats. Rents are good there. $887 for a 1-bed single family, 1-bed multifamily $922, and then it kind of goes up from there. So the Wyoming market is really good. It's a really good market. Our trend summary, you'll see that Wyoming actually went up more than Grand Rapids in the 12-month change. Not much to be said about that. I just think it's depends on the area, and some people might want to be in Wyoming and things like that. So some other notable updates. Zumper has said that the 1 and 2-bedroom apartment rates are up anywhere from 12 to 14% year over year, which is good considering maintenance costs continue to rise. Data from the National Delinquency Survey says that foreclosure rate is only at 0.19%, which is well below the quarterly average of 0.41%. So I don't see foreclosures going up anytime soon. Plus, as we've had appreciation, people will be able to get out of their homes easier, in my opinion, if they have to sell. So one interesting thing was Grand Rapids was ranked the 20th fastest growing dog-friendly city in the US by rover.com, and rover.com does work with Zillow. So their data, I think, is pretty good. That just proves, if you're going to have a rental, you should be prepared to allow pets. Not allowing pets is becoming a larger and larger challenge. People will sneak them in. They'll get their pet certified as an emotional support animal. So I really think that allowing pets is becoming a bigger and bigger deal, especially in Michigan. Maintenance costs are continuing to rise. We were kind of being optimistic that they would level out a little bit sometime soon. An example is I just talked to our HVAC vendor, and a 2-pound refrigerant with leak seal for like an air conditioning unit. Those last year were $80. This year they're $170. So maintenance costs continue to rise. We're seeing labor rates have gone up a little bit, but not doubled or anything like that. So I would just be prepared for that. We are continuing to be as proactive as we can to lower maintenance costs. Interest rates are rising. I just think that that's going to mean more and more renters, as they won't be able to afford the home that they want. One thing that we are keeping in mind, and I would keep in mind if you're a self-managing landlord, is if your income to rent ratio was 2 or 2.5 times the amount of rent. So for example, if it's $1,000 for rent and your income threshold was 2.5 times, so you'd want to see 2,500. Just remember that as inflation has taken effect, that means more and more of that residence check is being sent to gas, food, rent, of course, things like that. So I think I would look at raising that to 3 times, at least, if it were me. We are at 3 times. It's worked out pretty well for us. And the big news is the final date for CERA applications, which that was the federal funds for helping out renters. The final date for that is June 30th, 2022. We have not had as many people lately using CERA for funds. We're still getting them in, but it seems to be less and less every month. I would expect that the eviction diversion program will kick back in. That was a Grand Rapids, Kalamazoo was in on it. So kind of West Michigan based program that has funds for renters. I would assume that that's going to kick in again. And we will kind of have to wait to see if they're making any changes. I would assume that there's going to be some changes. I'm sure that they learned a lot from the CERA program. So yeah, those are some of the big updates. John with Simple Property Management. If you have any questions, feel free to reach out. Thanks. Have a great day.